The last 2 years have been tough for the local banking industry, with the sector recording a sharp spike in terms of toxic debts. The Central Bank sector report for 2017 indicated that there was an increase of 47 billion shillings on non-performing loans in the year to 260 billion shillings. Banks have blamed the failure by county and the national government to pay suppliers and the 2017 elections for the rise in non-performing loans.
You can't be able to counter logic, economics logic. You can't go to red to somebody whose default rate, as we saw, micros, they are still at 14. You can't let them at 13, and then default rate is. So you opt to lend to whoever is able to borrow from you at 16.
Equity Bank Chief James Mwangi says commercial banks have intensified recovery efforts in order to minimize the exposure. CBK report for the first quarter of this year says the ratio of gross NPLs to gross loans increased to 12.4% by April from 11.4% in February. The most affected sectors include real estate, trade and manufacturing.
Some of the key challenges we're facing, especially with our SME customers, is delays in payment by the county government and also arms of central government. So once the liquidity is released, we should see some of these customers being able to repay their loans.
Mwangi says a huge percentage of the bank's non-performing loan book is held by 3 corporate clients who have been facing financial headwinds. Equity Bank's loan loss provision grew by 22% from 7.8 billion shillings to 9.5 billion shillings year on year.
He'll be able to lend to those on cash flows, not necessarily on collateral. So we can change the game. We have started the advisory or the provision that is the central bank is recommending, and we're in full agreement that it's doable and possible.
NPL coverage moved to 79.9% in quarter 2 of 2018 from 105.1% in quarter 1 due to a slight increase in bad loans. The group's balance sheet registered a growth of 7% to reach 542 billion shillings from 505 billion shillings. This was driven by growth in customer deposits of 9% to reach 394 billion shillings, up from 363 billion shillings. Regional subsidiaries' share of group assets increased to 26%, up from 23%, as assets grew 21 to reach 142 billion shillings.